What's going on, lovely people? Welcome back to the channel. In this video here, we're talking about Coca-Cola. Now, Coca-Cola has been making some moves this year, if you haven't noticed, and they've been crushing all of their earnings every single quarter. Now, I want to talk about this company because I truly believe this is probably one of the best recession-proof stocks you could potentially own going into 2023 as we approach uncertain economic times with this recession that's around the corner. Now, I also put out a video that you could potentially watch right here. It should be popping up about the top 10 stocks you should be taking a look at as we approach this recession. Coca-Cola actually wasn't on that list. So this is almost like an honorable mentions of companies that you should take a look at. And here's the reason why I like Coca-Cola. One, obviously Warren Buffett's a huge fan, but apart from Warren Buffett being a huge fan of Coca-Cola, running through the numbers of this business, here's why this company rocks. You have a lower PE ratio on the trailing 12 months. So take a look at this. Lower PE ratio on the trailing 12 months compared to the 5-year average being 55.12. So here's the first check, right? Now, compare the earnings per share. You got 2.29 compared to 1.59. So you're getting this company at a slight discount compared to what the earnings are, right? As two, you're getting higher earnings per share, as well as you're getting a higher return on equity. Now, this return on equity, we're looking for companies that have a return on equity 15% or higher. Coca-Cola's return on equity is 42.39%. This is absolutely massive. And compared to the 5-year average of being 34.96%, this is hard to miss, guys. And they are doing a phenomenal job in that category. And take a look at that. Profit margin. Look at the profit margin, 23.44% compared to a 5-year average of 19.28%. So right off the top here, from a numerics perspective, I'm liking this business. Now, I've analyzed this company before, and to me, it is slightly overvalued at this current price. And you can watch that analysis up here to get the full scoop. The $60 price tag is a little steep. I can't remember what the price I was looking for when it eventually does come down. But typically, in a recession, consumer staples like groceries, as well as, let's say, natural gas and stuff like that, that'll always do well because, well, those are the staples, right? You need to eat and you need to heat your home, right? Especially now that the winter's just right around the corner. So as inflation rises, as interest rates rise, and consumer staples become now more the forefront where people are going to probably want to be putting their money, thinking as an investor, Coca-Cola is a phenomenal business because as a guilty pleasure snack or treat, this is a company that a lot of people flock to, and for good reason. It's obviously they have a tasty drink, they have a tasty product, as well as from an investment perspective. This company has weathered through so many storms, and this is the thing that you want to take a look at as you go into a recession. You want to find companies that can weather storms. Warren Buffett's been buying this company since the 70s, folks. And prior to that, it's weathered the Great Depression, it's weathered the 87 economic crash, the 08 crash, the dot-com bubble, the COVID crash that we currently see right over here, and probably this one too that's going to be coming up. Now, the only thing that I don't like about Coca-Cola is the amount of red that's on this board here. Now, what this software does, folks, takes a look at the cash flow statements, the income statements, and the balance sheets of this company, or any company that you want to take a look at, and grades it out of 10. Now, 5 out of 10 is obviously not a phenomenal score. Obviously, I try to find companies that are 8 out of 10 or 8 or higher. Now, if you're holding on to a business, this is just a decent staple company to hold on to because it's obviously there's not much room for growth. It's just how much they can just continue to sell their product. Their initial run through has already it's gone. It's already been from the 70s and onwards. Warren Buffett's pretty much rode that wave all the way up to becoming the legendary investor that he already is. But as, let's say, a company to own in your portfolio that is going to pay a consistent dividend, obviously this is a banger of a company. And take a look at this. Where they are doing something right is here. Their earnings per share growth has obviously been increasing. That's what we already established. The revenue growth is actually down a little bit. However, return on invested capital is high. The free cash flow is also been increasing as well. And the net income has been increasing also. So those two categories are phenomenal. The revenue growth, it's it is what it is, but you can depend on Coca-Cola to deliver. I can't really see this company ever going away over the next 10 years, let alone during a recession. Now, they are slightly diluting you, which is something to keep at the back of your mind. But if you are looking at this from a value investing perspective, now, this may be something to bother you. This may be a company that might bother you in that regard. But if you're looking for a company that's just going to give you that monthly payout, or that quarterly payout of a dividend, you can't go wrong with this business. And this business has been proven to weather storms, as I've said, with a high return on equity. And their current ratio is not the worst. They have enough assets on hand to cover their liabilities. I like to see companies that have a current ratio of 1.5 or higher. Now, that would indicate to me that they have that extra margin of safety and just in case they get into any kind of jams going forward. So where do I stand with Coca-Cola? I think it's a phenomenal company to own. I just think right now, currently, it's a little bit undervalued. But if this company's price comes down a lot more, this is definitely a company to own. And I'm going to just put some numbers in here, folks. So this software, I can just make assumptions about the future and what I think this company is going to do. And I can just do a 10-year analysis here. I'm going to fill out these lovely boxes, and then we can talk about where I think this company should be priced at, just to give you guys a better idea. Okay, folks, put those numbers in and click calculate. So the software is just going to run through all my numerics, and I've kept the revenue growth numbers like 0, 0.5, and 1, like literally not giving them anything. Just to try to give a conservative amount. And basically it almost has to fall beneath $30 a share for it to be worth these numerics. And this is being extremely conservative. So for those who don't know what I'm doing here, is I'm making let's say predictions and projections based off what they've shown here, based off revenue growth. So like over the last year, they've done phenomenal, but in the last 5 years, it hasn't been that great, as well as the last 10 years, it's been mediocre. So I'm saying no revenue growth, very slight revenue growth, and maybe like 1% revenue growth over the next, like year over year for the next 10 years. Profit margin and free cash flow margin, based off the numerics here, I've kept those numbers pretty much the same from what they've shown to be, at least from like previous years. And price to free cash flow, I've kept those numbers under, and PE ratio, kept those numbers underneath 20, because I feel like that is a very safe multiple to go by, as well as my desired return. Let's say I want to make a 13% return on my money year over year. What price would I have to pay? And that's here. It's $21.26. Current price is at $60. Now, do I think they might do better than this? Hey, they potentially can, but it's based off what they're doing now, and based off the fact that, let's say, there is a recession around the corner, I can't assume that they're going to do incredibly well. Can they weather the storm, though? That is the most important part. That's the question that we're trying to answer here, and I think they will be able to do that no problem. My thing is this: when a recession eventually does come, folks, and when the recession eventually does come, and you see these stock prices dropping ever so slightly, or actually not ever so slightly, but rather by incredible amounts, you're able to find this company beneath a $30 price tag. It might be the company to pick up. I know for me, I'll potentially, I might have to do another reevaluation. Let's say if I do 1% revenue growth on the low end, and 2% on the medium side, and 3% on the aggressive side. Let's see what those numbers come out to be. But south of $30 is a price point that I would like to try to pick this company up at, and $24.91. Not a huge change there per se, but I do feel a lot more confident knowing that this is a company that can weather storms, especially with the fact that they have been pushing those those costs that have been, let's say, risen by inflation onto the consumers because of their market share. They are confident. This is a company that they know that people are going to still want to buy their product, because not like there's anything like it out there, but you have the likes of Pepsi and RC Cola and whatever Coke companies exist out there. I'm not a big pop drinker, but nothing compares to the likes of Coca-Cola. It is a staple in pretty much any sporting arena, movie theater, any event that you're going to. You're out with your friends at a bar, you're getting a rum and Coke. It is everywhere. It is the staple soft drink, and I don't think that's ever going to be going away for a very, very long time. Just want to make that video, folks. If you enjoyed this video, make sure you like and subscribe, as well as write down in the comment section below a company you want to see analyzed. And this software here, if you want to get your hands on it or use it, go to my website at leodeleo.com, 7-day free trial, and test it out for yourself, cancel anytime. And yeah, it helps me analyze companies within an instant. We have the latest news on every company that you could potentially think about. You just drop it, the ticker symbol here, and we have all of this information available to you, the user. We have income statements, balance sheets, cash flow statements, all the statements that you could think of, as well as the visual representation of what's going on with the business. So in case you don't want to read everything out, you can look at everything. So in that regards, folks, thank you so much for watching. I will see you in the next one, and hopefully by the next video, my usual camera is back up and running, because it is what it is. So thank you so much for watching, folks. I will see you in the next one.